there are funds out there that you can invest in that literally, basically make bets on the carbon price.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. Today, we're going to talk about renewable energy and not so political terms. But before we get there, I want to remind you that there is a website associated with this podcast called wealthformula.com. That's where there are plenty of resources, including access to some of our groups, such as the Accredited Investor Club. You go there and sign up for Investor Club for free, and you basically get onboarded if you are an accredited investor, and you get to see deal flow. Now, the other thing I should point out is that we are now reopening something called Wealth Formula Network. Now, Wealth Formula Network is essentially our mastermind group. A few years back, I had a course called Your Roadmap to Real Wealth, and that cost about $2,000, and Wealth Formula Network, which was the mastermind group, came with it. Now we're giving away the course for free. Basically, Wealth Formula Network, which again is the mastermind group, is now available on a subscription basis, and the first month, actually, if you want to try it out, is completely for free. I would highly recommend that. Why not? Can't beat the price. So check that out at wealthformularoadmap.com. I think masterminds are really, really useful. I have found that in running this mastermind, far more than even the course, which I think is really valuable. I think the course gets everybody up to speed and the same kind of stuff, but the ability to talk to one another and also to be able to talk to me and get perspective on, say, what your personal financial issue is right now. Getting advice from other colleagues who think about this stuff deeply is very valuable. So once again, check it out, wealthformularoadmap.com. Now, let's get to this show today. And again, my goal here is to try to present this topic, renewable energy, in apolitical terms. Okay, I know people like to politicize this one way or another, but what I'm trying to do here is to give you a straightforward look at the financial side. And what I've found is pretty obvious. In the last decade, solar energy costs have fallen dramatically by nearly 90% since 2010. So in top markets, solar panel costs dropped from about 29 cents per kilowatt hour to 3 cents, right? By contrast, new coal and gas plants still cost between 5 and 17 cents per kilowatt hour. And these figures don't even include the unpredictable nature of fuel prices. Now, according to financial firms like Lazard, solar and wind power now average around 2 cents per kilowatt hour, while operating existing coal plants typically cost 4 to 8 cents. This obviously is a very, very clear advantage and a shift away from fossil fuels. So globally, the evidence is change as well. Countries like China, Europe, and the United States and India are ramping up their renewable investments, with almost every new power plant today globally that is being built is relying on solar or wind. Again, almost every new power plant built today relies on solar or wind. We've also talked in recent shows about nuclear power, which I'm very bullish on. I talked about how maybe that the best way to invest in artificial intelligence might be investing in uranium. Anyway, that's another thing. Bottom line is that even if you're not interested in sort of this topic as a conservationist, right? And I know, again, it gets really political, and I'm not trying to do that at all. I just wanted to look at this on the numbers. And that's what we're going to do today. This week's guest on Wealth Formula Podcast is an expert in this space, and we will have the interview with him right after these messages.
Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Gernot Wagner. He is a climate economist at Columbia Business School, and his research, teaching, and writing focus on climate risk and climate policy. He's the author of Geoengineering, The Gamble, and Climate Shock, the consequence of a hotter planet. Welcome to the show, Gernot. How are you?
Hi, thanks for having me.
Yeah. And so, let's get right into it. So, in terms of the big picture here, a lot of people see green energy as a social cause, particularly retail investors. In other words, that it sounds great, but is there something really here, or are we just doing this, to help the environment, which of course is a noble thing. But tell us why this is not just a noble endeavor or something that is a political thing, and that why it's a compelling investment opportunity.
Well, let's go right to the heart of the matter. Texas just surpassed California in total solar PV installations. October last year. And, to be clear, right, California got a head start, and, thanks to my fellow Austro-American you may have heard of, right, Arnie Schwarzenegger, right, signed a bunch of laws into place when he was there as the governor, and, California had its thing going, the Million Roofs Initiative, which was soon renamed CSI, the California Solar Initiative, right, and it was subsidies.
Right.
Right? Well, sorry, Texas, no subsidies, right?
Right.
I mean,
right.
The federal ones still apply, sure, but the federal ones apply to California too. So why is Texas suddenly pulling ahead?
Mm-hmm.
Well, because it is a fully deregulated market. There is, let it rip, right? Like if you own some property in West Texas, you used to basically start digging for oil, right? Drilling, because that was how you struck it rich. And now what you do is you put a wind turbine, at the edge of your property, and you put solar panels in the middle, right? And that's how you print money these days. And in some sense, okay, that's the answer right there, right? It is.
Yeah. So is that really the way it's happening in Texas? I mean, I guess I'm just sort of I'm out of touch here, and I don't really understand because again, this seems like stuff that is usually not retail level stuff. So is that what people are literally doing? And they're just,
Okay, so obviously, Texas is big and, there's plenty of, go to Corpus Christi and you see the refineries, right? So, and there's plenty of oil being drilled. But yeah, it is basically that if you care, like in this case, it's electricity generation, right? So you want to produce electricity in a market that, by the way, has no capacity market, right? So there's no sort of, we ensure stability by, keeping a bunch of gas peakers alive by paying them when we don't need them. Mm-hmm. You Texans, pay for electricity what it costs at the time it is being produced, which means every once in a while there's a spike in demand. And, when sunny August afternoon, prices are insane. Yeah, you want to be ready to make a killing at that point. And, okay, if it's a sunny afternoon in August and everyone turns on their AC, guess what? The sun shines too, right, during that time. And by the way, even if the sun doesn't shine, okay, now we're not talking solar PV, now we're talking batteries. And yes, amazing investment opportunity, regardless of whether you believe climate change is real. And, yes, it is, and you should worry about that too. But just from a raw investment opportunity, solar PV, wind, plus batteries are so cheap that this is not a climate tech play. This is an energy tech play.
Because this is not something that a lot of retail folks have exposure to, maybe could you talk about a little bit of the jargon? Because a lot of times in this space, there's things that comes up, you hear about it, that people might like to know about. For example, you talk about tax credits or carbon pricing or cap and trade.
Sure.
These are all crucial for green energy and carbon markets. But maybe you could tell us about what each one of those is.
Happy to. And to be clear, right? Okay, so, I launched right into the Texas story, and it turns out in Texas, there is no cap and trade. There's no carbon pricing.
Mm-hmm.
There are no carbon credits, right? So it turns out one can successfully enter this space without that particular mumbo jumbo. But okay, let me try, right? Because yes, it does matter. Okay, so I don't have to turn up my European accent even more to sort of say that, look, in the EU there is an EU-wide, Europe-wide carbon pricing system, ETS, emissions trading system, cap and trade, carbon price. Okay, what does that mean? Brussels, Europe, caps overall emissions, limits pollution, carbon pollution, in all of Europe for about more than half of all the carbon dioxide emitted in Europe. There's a cap. There are allowances, literally certificates that allow you to pollute 1 ton of CO2 each, that are being basically handed out, distributed, in part for free, distributed, in part auctioned off. There's a price for these things. And then, tax day, April 15th of the following year, if you have emitted a lot of CO2 the prior year, and no, this does not mean individuals, of course, this is refineries, utilities, steel plants, and so on, you will need to surrender allowances the following April 15th.
So if you go over your limit, then you pay a tax on that. Is that accurate?
If you go over your limit of allowances that you have been distributed, you need to buy allowances at the open market, right? Like this is a carbon market, right? This is not not command and control. There's not government telling you shall not emit more, right? It's a market. And frankly, what that means is now you have market participants, right? You have the Goldman Sachses of the world, right? Of course, right? This is a market that's worth, by the way, a couple $100 billion, a couple $100 billion. This is a sizable thing.
So give us an example just for context. Like how does Goldman Sachs make money on these carbon credits?
So it sounds silly, of course, but they buy low and they sell high, right? So obviously, right? And the way you do this,
but it seems like there would be a limit in terms of like how much they would be worth because.
Well, there is, and yes, there is, of course, right? I mean, there's an upper limit. There's also a lower bound, of course.
Yeah.
What there is a market that prices carbon to the tune of, latest price, I think, is like 80 euros per ton of CO2, $100-ish, right? $100 a ton of CO2, that if you emit a ton of CO2, a metric ton of CO2 in Europe, you spend 80 euros, right? Meanwhile, there's also what I would call the good kind of tariff. It's called Carbon Border Adjustment Mechanism, CBAM, if you care for the acronym, a carbon tariff. So, right, the whole point, of course, is like you're not supposed to be penalizing production in Europe and favoring the cheap imports from abroad, right? You want to level the playing field. So, yeah, the good kind of tariff basically says the same ton of steel produced elsewhere, let's say South Korea exports 5% of its steel to Europe. So if you're a European car manufacturer, you now decide whether you buy the steel in Europe or you buy the South Korean one or, from elsewhere. This carbon border adjustment mechanism, this carbon tariff, ensures that the price is the same. The carbon price is the same. Again, a tariff, the good kind of tariff, the one that passes WTO muster, the sort of thing that, we should be having in this country instead of whatever it is we are doing. And yes, it's the sort of government creation, right? This is a carbon market created by the European Union that makes investments in clean energy pay even more so than they do in Texas, where there's none of that. And of course, yes, penalizes, right? Carrot and stick, penalizes pollution.
So obviously, we've got the Goldman Sachs of the world. Are you seeing opportunities here for retail investors, or is this just for the big guys?
No, there's actually, so California has a system like this.
Shows you how much I know because I live in California, but I have no idea.
And by the way, California has a better one, right? This is why I was commending the other Austro-American, right? So Schwarzenegger signed this emissions trading system into law, that covers Europe only covers 50% of emissions approximately. The California one covers 85% of emissions. And all of them, not just CO2, but methane and all these other greenhouse gases. And, it's designed fairly well. It's the implementation is about as good as these things can be. And there is a carbon market where I'm happy to name names, but there are funds out there that you can invest in that literally, basically make bets on the carbon price. And just to give you a sense, that carbon price by law increases by 5% plus inflation every year. Right? Okay, so, you can, put it into the market, of course, or you can put your money into that vehicle that is basically guaranteed by law to rise by 5% plus inflation forever, right? Now, okay, there are some uncertainties, there are some questions, but okay, hate to tell you, but Sacramento isn't going to get rid of that emissions trading system, right, anytime soon.
So where do you buy, if you're a retail investor, where do you buy that? Where do you go?
Well, in this case, there is literally a fund, looking it up right now.
Because you're talking about something like, for example, 5% sort of fixed, and that might be appealing to some people. With the bond markets, that
I bet, yeah.
Right.
And so in this case, there's this outfit called Knightsbridge Wealth Management that has set up this fund that is basically a pure play on California carbon prices. I think the fee of entrance fee is I think $5,000, so there's a bit of a hurdle, if you will.
Yeah. Sure.
But it's not insurmountable for lots of folks, and it's the sort of thing where so to be clear, right? You've got to look for that. This is not right. My default retirement fund choices I get on wherever, Fidelity or wherever, right? Do not include a pure play California carbon market.
I'm sorry, what was that called again? I'm just curious.
It was called, KWM, the Knightsbridge Wealth Management.
Knightsbridge
Wealth Management. That's it. Yeah, actually, that's it, literally. So I'm looking it up myself right now. Yeah. It's a thing. It's $5,000 gets you into the market. And again, pure play, which may not be for everyone, right? Like this is literally the sort of look. I have researched California carbon markets. I believe that the California Air Resource Board is managing these things appropriately. I have looked at where emissions are going. I've looked at where technologies are going, right? Because in some sense, by betting on carbon prices, you're in a sense not betting against technologies, right? Low carbon tech. But you are basically betting that the race between decreased emissions in California, in this case, and increased availability of the good kind of technologies, right? The EVs and heat pumps and solar panels and so on, isn't quite catching up quite yet, right? It needs to be pushed, which means those prices, the carbon prices, are gonna keep rising. Turns out they actually rise by law because right now they are very much, they're near the minimum where they could be. They're going to increase. They will.
One of the things that comes to mind when you talk about some of the potential risks, though, and, maybe this doesn't relate directly necessarily to California as a state, but if you look at the new, the Trump administration now, they have a very different stance on green energy.
Okay, that might be an understatement, right? What is it? Wind turbines turn whales batty, right? So we don't like offshore wind in this country anymore because, we don't like the whales going
there's
nuts,
any
right?
number of things like that. But the bottom line is that, there's a real issue there, and you wonder what the future of that investment market would be if there's at least a federal control of it or any sort of federal orders around it.
Yes. Yes. And, okay, what does that mean? Well, it does mean that in this country, if you're betting on legislation, right, you better go down to the states and the cities, right? Because in some sense, actually one of the later things I've written, my column was on the climate policy pendulum, right? So that's not going to swing back at the federal level anytime soon, or, not the next 4 years. But what will happen is that some states, not all of them, of course, will try to do something about the fact that less than nothing is happening at the federal level. So that's one. So this is the California play, right? Another one is, okay, so let's look at real companies, right? Like, let's look at NextEra. So the largest utility out there. And this is not me saying what they should be doing. This is NextEra talking about what they're going to be doing. For them, it is solar, wind, and then they also have gas as part of the mix. And this is where I would say, actually, have you looked at batteries? There's more here, right? You should be looking beyond fossil fuels, basically.
Mm-hmm.
But, okay, NextEra itself, again, largest utility out there, is basically looking at solar PV and wind, onshore wind, regardless of what happens at the federal level, and is basically saying, look, this is going to happen. Solar PV is so cheap. There's nothing Trump can do to stop us from deploying this at scale. He can prevent us from installing it on federal lands, and that wouldn't have happened anyways, for the most part. He has a lot to say about wind, because offshore wind is dead in this country. Why? Because that's federal lands, and if the feds say no more offshore wind deployment, then investing in Ørsted, let's say, an offshore wind developer, may not be such a good idea right now. Although, of course, look, all of that has been baked in, right? So there can only be upside at this point, too. Meanwhile, what's happening on, factories assembling solar modules in this country? Yes, in part depends on federal subsidies, tax credits, Inflation Reduction Act. Nobody knows what's going to happen with those. What we do know is how many? 14, I think, Republicans, elected Congress reps have signed this letter essentially saying, dear President, fine, we know you're not going to push climate anytime soon, but all these investments are going into our states, right? Vast majority are in red states. Let's not get rid of these.
There's an underlying force here, I think, that would make it more convincing, which is, and I think you just mentioned, how cheap some of this energy is. And at the end of the day, that's what's going to, more than any social causes, more than anything else, at the end of the day, I anticipate that it's a market issue, which is if you are cheaper than fossil fuels, you're going to win. So right now, of all the alternative energies, which are actually cheaper and by what degree than fossil fuels?
Okay, back to solar PV, wind, and batteries. The trifecta here. What is not typically included in this list as already cheaper is things like geothermal. But there's a lot of enthusiasm about it because, frankly, there's a lot of potential, especially in places like Texas where you have a lot of, deep wells already and, frankly, the capability of drilling that sort of, right? There's no oil development in New York City, turns out, right? Like, yes, geothermal potential here too, but we're looking to, places, oil service companies for that sort of stuff. But again, back to your question, what is already winning, not because of policy, but because it is the cheapest source of electricity in history, is solar PV. And I'm, vaguely paraphrasing an Economist magazine cover here. It's like almost a year ago, June last year, I think, where they put solar PV on their cover and said, look, there are 3 ingredients here: sun, sand, and human imagination. And all 3 are limitless, right? And, true. And basically, what is amazing here, and if you will, I'm talking up my own book here. Yes, climate guy here, right?
Yeah.
So I'm talking up climate techs. But what is striking on the renewables front in general is that they are technologies, right? They can only, definition of a technology, they can get only cheaper and better over time. We're not going to unlearn. And the main ingredient, right? Silicons. You need polysilicons. You need sand, literally, like sand, right? to produce solar panels. A certain type of sand and so on. And it's, I can snap my fingers and produce them, but still.
So the CapEx to create these things is really low, is kind of what you're getting at, right?
Okay, so now we can get into this. Yes, right? So what I'm talking about is the levelized cost of energy, of electricity, is really low. What is true, and this is a key feature here too, right? So why are oil, coal, gas so uncertain? Because the CapEx, relatively speaking, the initial investment is relatively low. A coal plant costs a lot of money, but they're relatively low. You pay a lot, month after month after month, for the commodity. And you're always at the mercy of commodity markets, right? That's my point of comparison. Renewables are technologies, oil, coal, gas are commodities, and you have fluctuating commodities being compared to technologies which can only get cheaper. Here's a key thing. Solar PV, most of the investment is upfront, the solar panel. Okay, that means there's a lot of initial CapEx investment, which of course is dependent on interest rates, right? So when interest rates go up, your solar panel price, the installation cost, goes up.
And that's going to be, I guess, at a micro scale, at least, what drives whether or not the energy basically you have to be able to sell that energy for more than the cost of debt. Right. And that's kind of it, right?
Yeah. Yes, of course. Right. So in a practical sense, yes, of course. Right. So, this is where we frankly have a point of comparison here, right? Like the one thing economists have going for them in Samuel's in this case, right? It's not absolute prices, it's relative prices that matter. Right? So if you say you look out a couple decades and say demand for electricity is only going to go up, which, I believe it is.
Yeah, with artificial intelligence especially, I think that's a fairly certain thing.
For example, fairly certain, then DeepSeek comes along and we figured out that actually, OpenAI may not have been all that smart to do what they were doing and so on. But who knows, right? There's some uncertainty. But electricity demand is going to go up globally on average, right? Okay, cool. Well, how do you meet that demand? And it turns out what matters, of course, is the relative price of the next solar panel or wind or, solar farm compared to the next fossil fuel plant, right? And yes, now you compare relative investments. And again, you look at one and it's only going to get cheaper. You look at the other and things are uncertain. And especially, right? So this is sort of, hashtag fossilflation, right? Like, things are driven by, guy in Kremlin blows a fuse and suddenly gas prices spike 10x, right?
Right.
Okay. What do you do with that? Well, you hedge against geopolitical risks and so on. On the solar PV front, you have a bit of that dependency on cheap Chinese solar panels. Yeah. But there's a huge difference. Again, it's the upfront investment. Once you have the panel installed, you don't care what China is doing. You are already printing electricity and printing money here, right? Versus if you install the gas turbine, now you need to import the gas from Russia, for example, and you very much care what Putin is up to every single day. And it's that difference that makes a huge difference in, investment certainty, basically, for renewables compared to fossil fuels.
I want to kind of shift a little bit and talk about other things that maybe we're not thinking about as much, because I think you wrote an entire book on sort of these, geo hacks that are out there to try to help with climate. What, for example, it's basically manipulation of the environment, right? And that's kind of, some businesses are trying to do that. Can you give us some examples of that?
Reluctantly, yes. Actually, let me start with this. Look, actually, first of all, in order to even look at this stuff, right, you need to believe that climate change is real. So if you have a guy in charge who, for some reason doesn't think that's the case.
Let me give you an example, though, where I don't think you necessarily, that's not even, I don't really even need to go there, but here's a real reality that I heard about in California, which was that, California, we have fires. There's no doubt we have fires. Yeah. That's not really a question. And then,
it's because it doesn't rain very much. So I heard about a company that was basically working on, planting or seeding clouds.
Yep.
I think the company was actually called Cloud Seed.
Yes.
Right.
Yes.
And so would that be an example of this type of thing or no?
Sort of. Okay. When I say sort of, very reluctantly saying sort of, because frankly, okay, this is in my book, like actually literally in my book.
Yeah.
I'm not talking about that. I'm talking about the sort of even a level up where you basically literally try to lower global average temperatures, right? You don't want to make it rain in a particular area. You're basically saying, hey, should we, right? Lots of moral questions there. Should we be trying to, quote unquote, manipulate the global climate? And, that's why the subtitle is The Gamble, right? There are lots of risks, both ends of this side, but both sides of this coin, of course. Cloud seeding, right? In this case, what you mentioned. Yeah, okay. Imagine being, a ski resort somewhere. And yes, because of climate change, you see your ski season shorten noticeably. Right, year after year after year. And then a company comes along and says, we can make it snow over your mountain, right? We can do that.
Yeah.
And, okay, it turns out they can. And for a price, they will make it happen, right? Okay. Should you be looking at that? And the short version is that increasingly, right, whether this is ski resorts or, cities where it happens to be particularly dry and so on and so forth, are, looking to these sorts of, using your word now, geohacks, right, to figure out how to make it less dry, to make it snow, and so on. Allegedly, it's hard to verify in this case, but the Beijing Olympics, it didn't rain for 2 weeks, right? Not at all. Okay, one reason might have been, because the Chinese military figured out a way to make it rain up in the mountains the week before or during the games to make sure that the Beijing Olympics, Summer Olympics in this case, were safe, right? No rain during those 2 weeks. And it's that sort of thing that, okay, first of all, comes with risks, just to be clear, right? Obviously, for all the obvious reasons. And at the same time is increasingly something that, okay, in this case, right, a real company is looking at as something to consider doing, consider thinking of making money. And yeah, so, based on my language, you can tell, right? I'm not endorsing or for that matter, pushing you away from it, but still.
Yeah. But you're saying, you wrote a book on this. So tell us again, I guess at the higher level,
higher level is a completely different story, right? So higher level is
give us an example of what people are trying to do first, and tell us what your thoughts are.
So here's what has actually happened, which is in 1991, Mount Pinatubo erupts in the Philippines.
Sulfur.
Exactly, right?
Yeah.
Sulfur dioxide and a bunch of gunk, right? Lots of gunk. So 20 million tons of gunk get thrown into the stratosphere. A year later, global average temperatures were about 0.5 degree centigrade, almost 1 degree Fahrenheit, cooler than they would have been without Mount Pinatubo. Right? And in some sense, solar geoengineering, at sort of the highest level, if you will, is looking at that and, not saying, oh, let's, explode more volcanoes, but saying, hey, can we do something similar? We, of course, is up for debate here, but would it be possible to think about a deliberate intervention at that scale that could, in fact, attempt to lower global average temperatures? And the short answer is, it seems like it would be technically possible. It seems like it would be fast, relatively cheap, and highly imperfect. And that's important to state immediately, right? Like, you're not tackling the root cause, you're not decreasing CO2. What you're doing is you're treating the symptom, right? You're treating the temperatures. You're not tackling the root cause. And, you can see, you can immediately see the problems with this, right?
So let me ask you this: when that
So that volcano went up. Was there a way to verify that indeed was the cause for the drop globally? I mean, that there was causation?
Well, not drought, but I mean, yes, global temperatures decreasing. Yes, absolutely. And frankly, okay, that was 1991, right? That was sort of, beginnings of the satellite era and so on. So, in some sense, we weren't looking for that at the time, right? We happened to see it in the data after the fact. We scientists, right? I was 11 at the time, right? So I wasn't involved in any of this, of course. Yeah. So scientists have since studied this and basically concluded to themselves that yes, it works technically. And okay, this is now the next step. Could we imagine, we as society, deliberately attempting to do this? And okay.
So are there companies right now that are actually working on that?
Sort of. There are. I would say, my immediate caveat here is to say that while there are, in fact, literally a couple, semi-serious, one very serious, one, frankly, a stunt, companies working on this, I would immediately take a step back and say, okay, this is not the sort of thing that, investors, retail investors, right? Flock towards for all the obvious reasons. And by the way, one of them is that, sorry, but this is not a viable business, right? This is not, right?
Well, it seems like something that maybe a government should do, if anything, right?
Bingo. Yes, right? And okay, now given the current political climate, right, I'm reluctant to even talk about this out loud. I'd say it out loud because, there's a difference between a democratically elected government who is trying to do the right thing and, frankly, whatever the heck is going on right now, right?
Well, right now you also I could see this kind of getting legs if Elon decides it's a good idea, you know what I mean, in many ways. So
I will, yes, right? But again, right, like, okay, so sorry, right, like, State of the Union or the non-State of the Union, right, where you literally have, a laugh line around transgender mice, right? And it's like, ha ha ha, yeah, we're spending $8 million on transgender mice, right? Turns out we are not. It's transgenic research, right? And okay, it's that sort of thing, right? Where in some sense, science facts are being distorted to such an extent that no, I don't want him to be tweeting from his golden throne at 4 a.m. that, found solution to climate change, right? That would be bad for all the obvious reasons.
So when you talk about the risks of something like that, obviously you're knees deep in this stuff as you understand what those risks are. But when I hear that, honestly, I'm like, well, gosh, if all of a sudden the temperatures start going up by several degrees every few years and we're screwed, maybe that's a good thing that we have that to try.
Oh, absolutely. Okay, here's where I stand, right? What I would say is we're at a stage where we have to do serious research on this topic because it is, right? It's so late on, unmitigated climate change that, 90%, 95% of our time should be spent on solar engineering, right? Like the sort of figuring out how to deploy more panels and heat pumps and, drive electric and drive less and insulate your homes, that sort of stuff. And there's plenty of money in that, just to be clear, right? So I'm glad we started our conversation talking about solar engineering. But it is so late in the game that, yes, we should be researching solar geoengineering as well, as long as, right, it doesn't detract from the need to cut emissions in the first place.
One last question, I guess, just to round it out. And again, when you think of like different places for somebody who's listening to this and saying, well, this sounds like an interesting market to potentially look into, like, not investment advice, but what are some of the things that you think are interesting things that, retail investors could be looking at that maybe they're not looking at right now? And how would they get involved?
I think the biggest comment I could make is precisely the bit about climate techs can stand and frankly thrive and are standing and thriving on their own quite besides, like without policy, without federal tax credits, without that sort of thing. With the help, of course, right? There's a need for the Inflation Reduction Act. There was a need for the Inflation Reduction Act. But we are at a stage where many of these technologies are not just in the money, but so far in the money that, frankly, it's a puzzle sometimes that we are not doing even more on that front. And frankly, I can tell you the immediate response, right? Why are we not doing more? Because, oh my God, that's something that Greens want us to do, right? That's the environmentalists over there, right? Those are the activists over there. No, not at all. It is basically a comparison between the sort of technology where, quite literally, coal prices, electricity from coal generation has not changed in price in 200 years, right? We've been burning coal forever for electricity, and increasingly less so, just to be clear. But the price has fluctuated, but has more overall, inflation adjusted, stayed stable for 2 centuries. Solar PV, when Jimmy Carter put 6 panels or whatever on the White House roof, it was 100 times more than it is today. And it can only get better and cheaper over time. So you are leaving money on the table if you are not looking to whatever you want to call them. I'll call them climate tech. I'll stick to my guns.
Yeah.
Solar panels, heat pumps, electric vehicles, and alternatives and so on and so forth that frankly are anything but alternatives. It's the fossil alternative that should be called the alternative here. There's very little federal policy can do to stand in the way. Yeah. It's basically, yet another wall that's never going to get built.
The books are Geoengineering, The Gamble, and Climate Shock, The Economic Consequences of a Hotter Planet. Gernot, thank you so much for being on Wealth Formula Podcast and explaining this complicated area for us.
Thanks so much.
Be right back.
You make a lot of money but are still worried about retirement. Maybe you didn't start earning until your 30s and now you're trying to catch up. And meanwhile, you've got a mortgage and private school to pay for and you feel like you're getting farther and farther behind. Good news. If you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator. It can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com. Again, that's wealthformulabanking.com.
Welcome back to the show, everyone. Hope you enjoyed that. Once again, just a reminder, join us on Wealth Formula Network. That is the mastermind of Wealth Formula Podcast. And as I said before, it's a subscription. You can try it out for the first month for free. If you don't like it, don't do it. And basically, it's as simple as that. But people get tremendous amount of value from it, and we are recruiting a new cohort for that. Check it out at wealthformularoadmap.com. That's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.